to be able to offer these e-learning sessions free of charge, thanks to the great support of sponsors like IA Financial Group. Our webinars are offered monthly at the minimum. We are very, very lucky to be able to offer 2 this month. So happy Valentine's Day to you all if you may have missed it. And I hope everybody is having a wonderful day filled with happy things and chocolate. And if you have any questions, we'll likely be able to unmute lines at the end, but James and Marilyn will be fielding them throughout at various occasions. So please feel free to use the Q&A in the chat box, and we'll make sure they get the questions as we go through. So without further ado, I'm very, very happy to be able to introduce the presenters for today. A cross-provincial demonstration of love for advancement and for what's going on. We've got James McMillan, Director of Advancement at the Selwyn House School here in Montreal. So not too far from me, I'm also in Montreal. And Marilyn Anthony, Managing Director of Business Development for Pear Tree Canada in Toronto. So due to the power of technology, we're able to bring everybody together today to be able to share a little bit about what they've done in their work together. So James and Marilyn, you're still with me?
Yes. Yeah.
Okay, the virtual floor is yours.
All right, sounds good. Okay, well, thank you, everyone. We're going to start this and go through, and I'm hoping, as anybody who may have sort of heard us before when we talk about flow-through shares, this is something I personally feel that every advancement officer should know about and at least have in their toolbox. So we're going to really focus on that and try to give you a really good understanding of what this is, how it works, and how easy it really is for your donors. So I'll say today's presentation basically is what if you could offer your donors a way to achieve philanthropic goals much sooner than they thought. And I think that's a key factor when you're listening to your donors speak about what they are already committed to, and we'll deal with that later. And of course, Marilyn is joining us from Pear Tree Canada and Pear Tree Financial Canada. Marilyn, do you want to just have a quick intro about your background, and then we'll go on?
Sure, thanks, James. Hi, everybody. Thanks for including me. My background is probably very similar to many of you. I'm a fundraiser by profession. Over 20 years in the industry, something that I fell into but have happily stayed in. I've been with United Way of Victoria, United Way of Toronto, Ketchum, KCI for many years, and then charities ranging different sizes from Heart and Stroke of Ontario, Kids Help Phone, etc. I've been with Pear Tree now for coming up to 10 years, and I put the concept of flow-through share donations through the same diligence as I would assume that all of you will as a fundraiser, because it certainly involving myself with Pear Tree would be putting my own reputation as a fundraiser on the line, but something that has worked out in more ways than one. So I know what it's like to be fundraising on the front line, and I hope I can speak your language.
Okay, terrific. So I'm going to continue on here, and just to make sure you know, we're going to talk about this particular thing that Pear Tree offers. It's not just flow-through shares, and it's called the Pear Tree Canada Flow-Through Share Donation Format, and that one makes a difference in what we're going to be talking about. And we're going to learn about this and share with you the different ways that you can actually talk to your donors about this and get things involved. And then I'm going to share my story of how it worked at Selwyn House about 8 to 9 years ago, and how we got that in to the school. It was brought in by somebody, and then we started, spreading the word amongst all of our donors, and it's been really tremendous for Selwyn. The information about flow-through share donation format is available on the Pear Tree website. All references and links will be done at the end of the website, and they'll be part of the recording. So the first thing we're going to do is we're actually going to watch another virtual Marilyn. You've heard her on your speakers. Now you're going to see her as well. And what we're going to do is go through, hang on. Actually, Marilyn, did you want to talk about this? I'm sorry.
Oh, yeah, thanks, James.
Yeah, go ahead.
I did want to bring to life a little bit about Pear Tree. I'll do so more later, but we are well known to many of you as the Pear Tree financial side of the business, and that's the donor, charity, and advisor, whether it's tax accountants, legal advisors, lawyers, or financial advisors, but well known on that side of the business. But what you may not know is we're actually a full service shop, and this is all that we do. But we also secure the issuances from the mining and oil gas companies. So I have colleagues that are experts in mining and oil and gas, and we work with the institutional end buyers. That'll make a little more sense when we get into the description of the format, and the bankers and brokers. So in dealing with Pear Tree, you're dealing with the entire format. We're not outsourcing any aspect of it, nor are we calling your donors a month from now and offering them an insurance plan. This is all that we do, and we very much respect the relationships of the fundraisers and the institutions, in such that those are your relationships. Ours are a transactional one when it comes to fulfilling their gift. So thank you for letting me make that plug, James. And Pear Tree ourselves, we give all of our marketing dollars back to the causes that our clients support. So you'll see in some of the pictures, the gentleman with the glasses that keeps appearing is our founder. Our two founders are up in the left-hand corner there, Renee Bleeman and Ron Birnbaum. But that's just a sampling of some of the causes, some of the charities that we've worked with across the country, spanning all sectors and spanning all areas of the country, and happy to do so.
Okay, so we're going to watch the movie, which is a good graphic explanation, and it's short. And then after that, we will get into more details and, of course, questions as we go along. So we'll get this going now.
As a fundraiser, how many times does fortune smile on you and drop an innovative fundraising idea in your lap? One that helps donors reduce their after-tax cost of giving and helps you raise more money. The answer, at least in my over 20 years of fundraising experience, is not very often. But do you know that there is a unique and proven major gift fundraising format that Canadian charities and donors have been using for a decade? From grassroots organizations to large institutions, donors and private companies are making gifts to their chosen charities using Pear Tree Financial's flow-through donation format. And it's really quite simple. Let's break it down. Pear Tree combines two well-established Canadian tax credits, flow-through shares and the charitable donation tax credit. And our format is governed by CRA advanced tax rulings. Flow-through shares were introduced by the federal government in the 1970s to encourage investment into the Canadian resource sector. With Pear Tree, major gift donors buy flow-through shares and receive their applicable tax credits. And in doing so, help Canadian resource companies provide jobs in northern and Aboriginal communities. Next, the donor gives the flow-through shares to any registered Canadian charity they choose, including private foundations or donor-advised funds. Pear Tree doesn't direct donors on where to give their money. We simply help them, once they've committed their gift, to significantly reduce their after-tax cost of giving. For the third and final step, the charity sells the shares to an institutional end buyer whom Pear Tree has arranged, and the charity issues a donation tax receipt for the full amount of the gift. Pear Tree takes care of the entire process from start to finish, all on the same day. So for the charity and the donor, it works just like a regular donation. There is no net cost to the charity, and the full amount of the pledged gift is received. Because the donor has both a donation tax receipt and the flow-through share tax credits, their after-tax cost of giving is reduced from over 50 cents on the dollar to less than 10 cents in most provinces, and in some provinces as low as 4 cents. Our format has been widely accepted by leading Canadian legal and tax advisors, charities, and philanthropists. With close to $1 billion raised for the Canadian resource sector and 10 years of experience helping charities raise more, we can help you.
Jamie, I'll just put a plug in there for us. We're well over $1 billion now into the resource sector.
Cool.
So I wanted to open with the point that we make very clear whenever we talk about our format, is that we're not providing tax advice, nor are we suggesting that you as a charity should provide tax advice. What we encourage your donors, our clients, to do is to seek advice from their own advisors. It could be wealth, tax, or legal. So wealth advisors meaning brokers or their tax accountants or their family lawyers. Typically, though, it's the accountants, and we work very closely with the accountants to determine the applicability of the flow-through share donation format for your donor. So in very basic terms, your donor has to be a tax-paying Canadian and has to be giving to a registered Canadian charity. And the donor themselves could give as an individual or could give as a company. But it's very important, as I say, can't say that enough, that donors seek their own personal advice. And we handle every aspect of the flow-through share donation. So we work very closely with the mining and oil and gas companies who issue the flow-through shares. We have a government relations effort, which works closely with the provincial governments and the federal governments, because their tax credits are coming from both those sources of government. We work with the institutional end buyer who buys the end shares, and we work with the charity to gain comfort in the format, and donors obviously to gain comfort. There's some legal paperwork involved, certainly, but that's something that Pear Tree works with the donor directly on, and ensures that it's entirely complete and a seamless process. From a charitable perspective, there are the requirements of the charity are to receive the gift, to receipt the gift, much like any other gift of securities. If a charity decided to keep the shares, we work with large capital-based companies, mining companies, for example. And if you decided to keep it IM Gold, because it would be a great thing to roll into your own portfolio as an institution, our entire process would fall apart. So the charity agrees to receive the gift and receipt the gift. And I'm going to tell you a little bit now about this chart, because what flow-through shares do is we allow a donor to achieve a lower after-tax cost of donation. So in Canada, what I referred to in the video, basically in any province, a donor is paying 50 cents on the dollar. This is a major gift donor, taxed at the highest tax bracket, but they're paying 50 cents on the dollar to give $1 away. So that's the donation tax credit. When you give $1 to charity, you get 50 cents back in your taxes. By buying the flow-through shares and donating those shares and receiving the tax credits for them, you're combining your donation tax credit and your flow-through shares, and you're further reducing your after-tax. So you're getting more back in your taxes. So that can accelerate a donor in pledge. We have many examples after 11 years of charities that have been in campaign situations, and donors had multi-year pledges. And in accelerating their pledges by using flow-through shares, they've been able to, especially in the school scenario, build the gymnasium when their kids are still there to use it. And it's worked very well from that point of view. And from a pure cost of giving way of looking at it as a fundraiser, it can allow your donors to give as much as 4 times more for the same after-tax cost of a cash donation. So we don't compare ourselves to a gift of securities, because obviously a donor could have securities that have appreciated, and therefore it wouldn't cost them really anything because they've made money on those securities to give it away. But if you compare to a pure cash donation, for example, in this chart, using an Ontario donor as an example, if I made a gift to your school for $6,250, my after-tax cost of giving, so what it cost me minus what I get back, is $3,100. But at an after-tax cost of $3,240, I could be giving a gift using flow-through shares of as much as $25,000. So you can see the ratio of what a donor has been giving to you, their after-tax cost, and using the flow-through donation format at a comparable after-tax cost, what they could achieve in their gifting. And then what I want to do here is take you through a $100,000 donation. So our minimum gift is $35,000. So it is a major gift tool. But on occasion, we're asked to consider smaller gifts, facilitating smaller gifts, 20, 25,000. And we're certainly happy to do that on a cost-by-cost basis. We're in the business of helping charities and helping donors to fulfill their goals, their philanthropic goals. So it's frankly, it's hard for us to say no, but do recognize that this is, in order to make these tax credits most advantageous, one has to be in the highest tax bracket, and that's usually, best case scenario, goes hand in hand with a major gift. Using this $100,000 example here, I'm going to go through what the cash donation would look like, what the after-tax cost of giving per province is, and then what the savings are. one thing that you might want to note is that the federal tax credits that are part of flow-through are able to be carried back for 3 years and carried forward for 20 years. And the provincial tax credits can be carried back for 3 years and carried forward for 10 years. And as you probably all know, the donation tax credit can be carried back for 5 years. All this just to say that why it's so important that an advisor looks at this on an individual basis per the donor and sees if this is applicable for the donor. They may have had a particularly heavy taxed year in past years and they want to apply these tax credits backwards. So all of that is absolutely doable. This chart compares British Columbia, Alberta, Manitoba, Ontario, Quebec, primarily because those are the provinces where mining is done in Canada. But that's not to say that we don't have clients in other provinces, in the maritime provinces. And what we do in that case, where there isn't mining in a provincial area, we would use mining opportunities that happen in the Northwest Territories, in the other territories, because those credits are available to all Canadians. But just looking at these provinces, so walking you through in British Columbia, the after-tax cost is a 50% cost of giving. Using the Pear Tree donation format, we can bring it down to a 5% cost of giving, which is very compelling for most donors. And so their savings is 90, and when the finite numbers are in, typically over 90% savings. And that allows a donor to think, I can give more. It also, from an advisor point of view, for example, a wealth advisor, it means that the money back is a greater amount, money back into the assets under management. So the donor comes out ahead from a cost of giving perspective. Donors can use our format if they have a operating company or a holding company using a corporate model. Not going to get into that today, but it is even more advantageous, offering a lower after-tax cost of giving, and it changes slightly for each budget. We're highly monitoring every budget to see what those changes would be, but it is applicable, though not applicable in every province.
Okay, thanks, Marilyn. Excuse me. So what we're looking at is, from Selwyn House's aspect, is how do you get this into your school? It's interesting because you think it's probably an obvious answer, and we thought it was, but it comes because somebody, and in our case, a board member, came in and had tried it and was successful with it, and is quite the advocate of flow-through share format, donation format. And what happened is you start convincing a couple of the major donors on the board. Once they try it and they realize the tax savings and the tax planning advantage, then they start telling others, not only on your board, but they start telling other parents, other old boys, other friends, and everything else. And what happens is that just started to spread. When we started this, the Quebec return rate, I think, was 4.95%. Mm-hmm. And so when these donors tried it, and that's actually how it worked for them by going back on their taxes and forward, they found this to be a tremendous tax planning tool. And all sorts of things began to change for us in how they would make pledges, what they would consider doing, and this sort of thing. So it was a slow process to begin with, because obviously, they say, oh, it can't be legal or whatever else. But once you go through all this stuff, and your lawyers are dealing with it, your financial planners are into it, they all understand, and it's all on the CRA website. I mean, this is all legitimate stuff. One of the things, and I'm going to bring this up simply because I know at some point, I mean, flow-through shares have been around since the 70s, like Marilyn said, and originally this is somebody who is a speculator would buy flow-through shares and hold on to them, and hopefully if the mining company or the gas company would be successful in finding what they were digging for, finding gas, in which case those shares would be raised in value. If they didn't find it, the shares would go down in value, and it was a risk venture for them. And I know in some cases, you find people who may have, tried this back in the 70s or 80s or 90s and said, oh no, it was too much of a risk, particularly for a school. There is no risk in what we're doing now because the school virtually never owns them for more than a few milliseconds. They go in and out, and the people who are authorized to buy these, the institutional buyers at the end, these are the ones who are buying them because they want to take the risk. And this is why you get the double receipt. So this is important to know about what we're working with. Once your donors, your board members and your key donors start finding this is a legitimate effort, and they start seeing not only the tax from the last 3 to 5 years coming back, but they can plan 20 years forward. They know that they can spend less to do more. And I think this is a real key factor. We started seeing changes in certainly things in letters of intent or in our old pledge forms, where they'd say, okay, we're gonna do this donation. We'll make this pledge, and but only if flow-through shares continue. Now we were, at the time, they were continued. They have continued. I think was there 1 year it didn't come across, Marilyn?
No, we were in a strange time years ago where the government fell and they weren't renewed. And yes,
okay, so 1 year
life together, Jamie. Yeah, for sure. There has been 1 year in the. I want to say the.
So this is where you find a donor who gets used to this idea of being able to work with their money in a certain way that they get the most back from it. They would say, okay, fine, we'll make this pledge at this level, and provided that flow-through shares continue. If for a reason there isn't a flow-through share that they can get into that particular year, they would just push it ahead to the next year until they were there. And so obviously the idea is you want to keep in touch with them, and you're always making sure they know that things are coming up because they use it as a planning tool. One of the biggest things, certainly I think in all of our cities that we work in, is that we're not the only institution that is asking for money. I know in Montreal, you got the McGill's and Concordias and the MUHC hospital complexes, and there are 9 zeros at the end of what they're trying to raise. And so everybody who is a major donor is being hit with this. And what we found is that with the flow through shares, they were able to start saying, okay, hang on, I can actually maybe finish my 5-year pledge to the hospital sooner if I use the flow-through shares, and then I can then include Selwyn or LCC or whoever else is going to be in there. But it gave the donor that option. That option wasn't there before. They were tagged for a big amount. They knew they were stuck for 5 years at a large amount. And yet, Selwyn House was coming after them, or any of the schools, and saying, look, we're on our capital campaign. So this is what we found made a difference, is that they say, okay, we can do this. And this is why in the beginning I was saying, this can actually have an effect on, we can do this sooner than anticipated. We can satisfy all of our pledges sooner than anticipated, and take a look in the head and see what is really going to work. Keep in mind, they can also, a lot of our donors, you have donor advised funds. Well, they can use this same system to build up their donor advised fund. So when they do that, then they have command at being able to make up the donations they make throughout the year through their donor advised fund with the same style of tax savings. So that was important, and that made a difference to us. Certainly in Montreal, Jewish Community Foundation, CONAM, and 3 or 4 other of the donor advised funds, a huge difference in what they could do. The key thing that we're looking at. And what I look at when I talk to my peers in fundraising is, flow-through share donations are not the only financial tool that you need, but they have to be one of your key tools. And they're key when you listen to your donors. Because donors will give you, I would say, excuses or reasons why they can't maybe support you now because they're doing other stuff. And if they haven't used flow-through shares, the flow-through share format will give them an opportunity to say, okay, maybe we can do this sooner. And it opens up their eyes and allows them to do other stuff. And I think that's important. For me, it's a key thing when I'm talking to the donors about this. It's not just Selwyn House. It's not just my charity. I think it's important that the donor knows they can help other charities that they want to help, and maybe do it a little quicker than they thought they could in the past, as opposed to just, bulk amount of money over a certain amount of years, and I have to wait 3 years before I can do something else. No, they can actually do it much quicker. And I think this is one area where flow-through shares are just extremely good to use in their financial planning. And this is what we're looking at is I always assume that every donor and every major donor we talk to has at least 3 to 5 other either pledges or letters of intents out, or somebody coming to see them for something else. Certainly in Montreal, you get hit from all sides for everything. And I think it's important that you're able, as a fundraiser, to give them these type of options and say, have you thought about this? Now, if they've done it, then great, because then now they're doing it and realizing it sooner. But if they haven't done it, this is a real eye-opener. So by the time they talk to their accountant and their financial advisor and say, if I do this, will this allow me this? And they're going to say, well, yeah, it does. Because we can go back 3 years and get taxes you've already paid. Excuse me. One of the key questions I always ask a donor, and it's really quite simple, is do you pay any income tax? And of course, the eyes roll and they look back, particularly in Quebec. It seems to be, everybody pays more income tax than what you get for income. And they say, yeah, we do all this time. I said, okay, would you like to get that back? And this is how you get it back. And in Quebec, it's at 2%. The cost is 2%. It's ridiculous. So you're going to get a lot of your money back, which means they can plan, they can look ahead, they can start by getting money they already given to the government, and they can continue by looking forward. And maybe it'll make a difference in when they sell stocks, how they do these things, and they can really use it as part of their financial planning tool. Meeting their previous commitments is extremely important, because they had it and they want to make it happen. And I just found that once they have this tool, then they don't have to talk to you about it. I send emails to everybody who's done it, and every time I get a notice from Pear Tree, I forward it out. I know Pear Tree probably sends it too, because they're thinking all the time that I want to do this. Oh, that'll help me there. And it's offered several times a year. Marilyn, I think at some point you said the 30 sort of overall, but I think in general for individuals, was it 7 or 8?
Yeah, 20 overall in 2018, but 2018 was one of our worst years because of the downturn in the
right.
Yeah.
So it's not something you can pick up every second Tuesday.
Right.
It's something that you have to wait. You have to learn about. Pear Tree's very good at letting all of their customers know there is an offering coming up, and so then you can send your emails out to say, look, there is an offering coming up as of next week. If you're interested, contact. And I just tell them to contact Pear Tree. Because I'm not doing this. I don't do the contracts. Pear Tree does all that stuff, and they take care of everything from start to finish. Mm-hmm. And really, the total transaction is probably milliseconds within a day, and the contracts are all valid and signed and all done there. So this is something that I think will help them strategically plan their philanthropy. And again, as I'm trying to say in the beginning, to plan it so they can do it much quicker and much sooner than they thought. And that's basically the format of how it's done. There's probably some questions, and as we go through there, we're going to try and answer what we can. I know Pear Tree has people right across Canada, and you can call the main numbers in Toronto and go through there, but they'll allow you, and all the information is at the end. So I think that's kind of what we're looking at for how to really understand that. Are there any questions that Tara, that's come up?
Nothing in the chat box or the Q&A just yet. So folks, as a bit of a reminder, lines are all muted. So we do recommend that you use either the chat box or the Q&A to pose any questions to Marilyn or James.
Sure. James, I thought I might take a minute just to explain what a tax ruling is. Tax ruling 101, 10 seconds or less kind of thing. A tax ruling is issued by the federal government. It's sort of like applying to a very large foundation. You have to apply. They may or may not review. And it is the Pear Tree format, I call it our recipe, the Pear Tree format that the ruling is applicable to. So we certainly have some friendly competitors out there, others that are making this available. And there's no limit of donors and important causes in Canada. But what's important for you to know is that it's the Pear Tree format that this ruling, and the link to it is on our website, that this ruling has been applied to. And it's really the belt and suspenders for the donors and for their tax advisors to know that as long as the recipe is followed exactly, that is all acceptable and permitted by CRA.
Perfect. We do have a question. Thanks for that. The question was, what is the downside, if is there one, of using FTS?
Mm-hmm. Well, I'll take a stab at that first. Certainly, from a charitable perspective, from the charity side, is if you have donors who have somewhat conditionally pledged and say that I'll make my gift available if flow-through shares are available. I guess a downside, Jamie, could be for you in that case that if a deal isn't available to them, they may not be fulfilling their gift either that year in full or at all. Is that something that you consider, Jamie?
Yeah, and that's actually happened, but they simply put it off to the next year, and it wasn't a big a deal.
Right.
And I understand why, because I mean, at the savings that you're making, it doesn't make any sense to give the, it was a $50,000 payment, and to make it straight out and have to pay 50% tax didn't make sense. And they waited, I think, 2 months later in February or whatever the next year, and there was a flow through, and he did it then. So then, and because he was in Quebec, it only cost him 2%. Mm-hmm. So I don't, I mean, as a school, I don't see a downside to this. I mean, if somebody has to wait another 3 months to see if there's any other things coming through, excuse me, in order to realize, the effects of what the flow through can do, that's not a problem for us. Mm-hmm. It shouldn't be for any school, as far as I know.
From a flow through, from buying a flow through share perspective, whether you're buying the flow through shares and you're donating them, or you're buying them for your own portfolio and not donating them, there is a risk in the issuer, the mining company. Do they fulfill the obligations for flow through? So given that flow through has been around for almost 50 years, the government, the federal government, has gotten very good at the control of the list of the expenditures that are applicable to flow through. So a mining company can only buy equipment, all costs relevant to flow that can be spent within that year on flow through, and the government monitors that. If in the case a company doesn't or misuses that, then the tax credits could be reneged. That's why we have in-house counsel. That's why we have people who know that industry very well working on our team, because the diligence of us picking the mining or oil and gas company to work with is an absolute key component to the entire process. One bad deal and we fall apart.
And I noticed that there's a lot of issuances. I mean, some of the companies we see regularly, right? They issue and they'll issue again at a later date.
Yeah, we work with them. We often work with them over and over again. We did $40 million with the Cisco, and that was our fourth opportunity with the Cisco, one of the largest market caps in Canada. We've worked with IM Gold to the tune of 60 million. And the reason that we keep working with these companies over and over again is because we've built a trust in their executive and their ability to fulfill their obligations. And so therefore it's a trustworthy source for us to put in front of your donors.
Perfect. Thank you both. Thank you for the folks who answered that question. If you have a follow-up question, feel free. They said thank you, so I think you may have covered that to them. Any other questions or pieces for James and Marilyn?
My only thing for this has always been just know about it. You've got this, have this stuff from CCAE. You can download this and have this, handy in your computer. And you can also call Pear Tree. And I just think it's a tool. Use the tool, make it happen. And if you got somebody who, pays a lot of taxes, this is a way to help them. Even if the gift doesn't come to you, it all will return to you eventually. If they realize you gave them something that they can realize their other philanthropic goals, your name's going to be in there. Your school will get back in there. So I think that's really important. And we've had that. I recommended to somebody and it was for the hospital and they did it and that's fine. And then 2 years later, we got it.
So a question for you both, and again, as this is posed, I do recommend folks either leave it in the Q&A or the chat box. Both are available to you. So to James and or Marilyn, when proposing this to potential donors, do you have any tips or tricks that you've used in the past to kind of introduce it? Because it's essentially a little bit of an assumption on someone's philanthropic means, because there is a minimum contribution threshold. So is there a way that you've done research on the donor or their previous giving maybe before you've pitched this, or do you think pitching it to everyone and hoping they step forward if they meet the qualifications is a better method?
I'll go through that first, Marilyn, if you like. For us, I mean, I would only do this for major donors. I would only do this for people who, were considering giving us, high 5 or 6 figure gifts. And that's it, because I mean, they have to be paying tax, a lot of tax, in order to realize the savings of this. I mean, this also works, I mean, with a $20,000 donation, but that's a lot of work for that. And I think primarily that's why, everyone was saying, the minimum is 35. But even at 35, somebody can realize that savings immediately and be able to get it back, especially if they paid a lot of tax in the last 3 years. So it has to be, I think one of the first things Marilyn said is you have to be paying tax. You've got to be paying tax. So, I mean, if you're earning enough money that they're taking half of it away just before you start, then you have the ability to say, well, you can get that back. And then you can tax plan forward by knowing what's happening. And that's it. But I wouldn't do it to somebody who's, $100 giver. If I know they have the capacity to do more and they're just giving me $100, well, then I might mention it. But for the most part, you're not going after the average donor who's, giving in a lower level, but you're trying to look for those people who are actually at the higher level, because it's a tax thing. And if you talk tax to most people, they glaze. So it's a matter, if you're paying a lot of money in taxes, you're paying a lot of money taxes, and then you say, well, what, I can save that? And you say, yeah. And then you go through it. And I constantly will use this type of chart just to have and say, well, look, here's a sample. You can see this, just, $100,000. It could be $50,000 or 75. It's, the numbers are the same, but hundreds are easier to work with. And you see, look, that's what it costs.
Right. I would say people who are in donors and prospective donors who are in or considering multi-year pledges, that's a good one. Those that own their own private companies or members of their family own their own private companies, that's a good one to look at, just sort of when you're doing your database analysis. Individuals who are, this can be any source of income. So an individual, say, who you happen to know has a decent salary, but has a pretty fantastic bonus. And that's how they make their money, because this can all be applied to pay down the taxes paid on that bonus. So as much as you know about your prospective or current donor and where it fits in, but the concept, all of that said, the concept, we're constantly amazed at individuals who are interested in doing this, that this inspires them to give more. It is about tax, Jamie, you're 100% right, but our donors are already, our clients, are already philanthropists.
Yeah.
So individuals who say things to you like, I wish I could do more. I'd like to see this done and built when my kids are still here. Those kind of, what if there's a way that I could show you that you could do more? So for the same cost of giving, you could do more. Or as Jamie mentioned, one of the techniques, I'm already in pledge to X and X and X. Well, what if I could show you a way that you could make all those gifts work and it would be a lower after-tax cost of giving? So trigger points like that. And I opened with this, and I'll say it over and over again, you don't need to become an expert in this. We are the experts. All you need to do is say, are you interested? And we receive calls in so many different ways. We'll get a call from a tax advisor who says, I'm calling on behalf of Mr. and Mrs. X. I'm exploring the possibilities. We'll get a call from a charity saying, I can't say the name of the donor, but can you talk to the advisor? We'll get a call saying, the donor's going to call you in 10 minutes, or the advisor's going to call you in 10 minutes, and tell them everything. They're ready to go. So whatever direction you or the advisors give us to work with, that's how we work with the individuals. One thing that you should, kind of going around in circles a little bit, but one thing that you should also be aware of is once people are interested in doing this, they're not beholden to do so. Their names are, they've put up their hands, they've said that they want to participate, but then the issuances, the deals come along, and if a donor, for whatever reason, either from a cash flow perspective or I'm traveling and I just don't want to think about this right now, they don't want to participate in that deal that's being offered, that's up to them entirely. So there's no binding commitment in participation, but it should be known too that the offerings don't line up very well with individuals when they want to try to tie this into doing it in December and being out of pocket for the shortest amount of time before they file their taxes the next year. The truth is that what happens with those donors is that they aren't able to fill because we have a pipeline of donors who are waiting for deals to come along, and so they miss that deal that year, and they'll realize that pretty quickly that if I want to show up at the board meeting or at the parent council meeting or the event or the golf tournament and have made my pledge, I better do it in January when I can, I have the benefit of the year to make this happen. So people, there's a little bit of managing expectations on that side, but as far as looking for donors, I'd look for those sort of things when I'm looking through my database.
Can I add one thing to that too, is that once the school decides that they're going to recommend flow through shares, and they get a board member or a donor who's going to do it, you should make sure that your gift acceptance policy is set up so that it says that you will accept a flow through share donation service, and in a certain way. And actually, we'll have a sample gift acceptance policy wording from Pear Tree that will be added to the presentation, because it's something, if you've never seen it before, you need to have in your gift acceptance policy.
Thank you both. I really do appreciate some of that insight, Marilyn, on what potential candidates look like, because I think people will keep their antennas up and see if anybody can kind of fall into that dialogue. A question did come in. How does this get recorded in the financial records at the school? So maybe Jamie, you can field that.
Sure. There's a donation of shares at a certain level, and what happens is the part of the donation format is the cost of doing all of this is borne by the donor, and what happens is it's all figured out ahead of time. So if the donor says, I want to give the school $50,000, and then just for rounding up of numbers, Pear Tree will go through and say, fine, in order to do all of this, there's going to be a $10,000 bill for the legal and whatever else. So you have to give the school $60,000 worth of flow through shares. And so what happens is the school receives the $60,000 worth of flow through shares and receipts the $60,000 of the flow through shares. Then you get there's an invoice that'll come in for the flow through shares. Let's say it's a 10, and you pay that. It's the same as you would a credit card bill. If I give you $100,000 on my American Express, when that funding comes in, you notice you paid money on that. And so that's done, but the donor has paid that. They give you extra shares because Pear Tree already figures out how much it's going to cost, and they give you extra shares so that they wanted to give you 50 or 100, and they add the extras on. So they get a tax receipt for the 60,000 shares, which is what they gave you. And then you would mark in, and all we do, and certainly if you have Razor's Edge or whatever system you're using, you simply go in and say, fine, we've got a $60,000 gift, we have a $10,000 expense against it. And so it's marked that way, and then we mark it as flow through shares as an attribute, and so we can track them and go through. So the intent of the donor is satisfied at 50. The school actually gets 50. The school doesn't incur costs because he's given the extra money to cover the costs, and it's all done. And the donor's happy because he's got a receipt for the 60 that you gave him.
Perfect.
And that's all covered within the ruling as well. That's all part of the formula.
Yeah.
Thanks.
Yep.
No, I was just going to say thank you for sharing that. To the individual who asked that question, feel free if that was not covered. But in the same effect, Jamie, if there is anyone on the call, Marilyn, I know you and your team cover folks, and should they inquire about this anywhere, they will be walked through all the steps A to Z. But on the institutional experience, Jamie, are you open if people are to contact you if they're looking at
always
implementing this in their own shops?
Yeah, anytime.
Perfect.
Yeah.
Great. Excellent. Okay, thanks, folks. Keeping an eye on the time. Any other questions or items to pose to James and Marilyn while we have them? Okay, nothing else coming in. That might have us covered. Any closing statements, thoughts, tips from our presenters?
I have one, is that CCAE, of course, has recorded this, and so now it's part of the CCAE Resource Library. And so you can spread the word about it if somebody else asks you, and they can come to CCA. If they're a CCA member, they can come in. If not, they can, I think, join in order to get access to. There's a lot of resources available, and this is certainly one of them. And then you can just take this presentation and take a look at it with whoever's asked you to do it.
Thank you. Marilyn, closing statements.
Sure. One of the main questions that we get asked from the charity side is, how do I put this through the diligence of my own charity? So your own culture, whether it be a finance committee or a board decision, or your own legal advisors or accounting firm that works with you as a school. Feel free to reach out to either my colleagues across the country, myself, and we will spend the time with those people at your end to pass your own diligence, to kick the tires to see if this is right. What happens a lot for us when it comes to accounting and law firms is we'll say, okay, who are you with? And the advisor will say Ernst & Young, and we'll say, great, down the hall, around the corner, talk to so-and-so who's a senior executive at E&Y, and it's not only advises and directs his or her clients to use Pear Tree, but also is a donor themselves using our format. So we've passed diligence in certainly all of the large firms across the country, and have worked with many of the smaller ones as well, and we're always pleased to spend the time to do so.
Perfect. That's great, and I appreciate that. And so I think nothing else lined up in the queue in terms of questions. So I do strongly urge folks, if anything does come up, please feel free to get in touch with either of our presenters. At the same time, I do definitely want to thank you for your attendance today. James and Marilyn, thank you both very much for sharing some of your expertise and your insight. I know that it could be difficult to grasp. It's a fairly large and technical piece of the pie, but listening to both of you, you make it sound pretty achievable and easier to digest. So thank you both for that. And once again, as James did say, all of the CCA webinars are available in our archives and free for download for CCA members, as they're offered free for registration because of sponsorship. So we are back on February the 21st with the next webinar in February, Life After Your Degree, presented by McGill University. So we hope to see you there. Once again, thank you everybody for your time, and I certainly hope to see you soon. And once again, I wish you all a very, very happy Valentine's Day.
Thank you, Tara. Thanks, Marilyn.
Thanks.